So in this video, we will go over the SPY contracts, 70,000 of them, that one of our subscribers pointed out and wanted our thoughts. And we wanted to respond in kind to our subscribers since they were spreading love and positivity on our channel, which we really appreciate. When we made our Tesla video yesterday, predicting the rally on Sunday, which happened. So you can watch our Tesla videos this week to learn how we use unusual options activity to maximize profits. Another way you can actually thank us is sending us a super thanks for the videos that we are providing. If you're able to make money from them, it'd be really appreciative if you can also extend that gratefulness to us in any way you can. So let's get right to it on the SPYs that happened yesterday, August 29th, for this subscriber. 70,000 unusual options. And we can see there's these 35,000 here. All right. So what is going on here? Let's first take a look at the October 6th. So these were done at the same time here at the 12-second mark at 11:02. All right. So these are 360 strike puts, 390 strike puts, 35,000 here. And then you have a 70,000, which is twice as much at the 375 strike puts. Okay. So it's October 6th. That's in 37 days. We can see now the 35,000 are over here. The 70,000 is over here. And the 35,000 is over here, right? So we believe they are selling the 375. For every of these trades, they sold two, and they bought the 360, and they bought the 390. So this cost of per trade is actually pretty cheap, $5 each trade. Okay, and when you analyze the trade, you can also see what this looks like. This is a bearish trade here. You can see currently SPY is at 449. As it goes down, it becomes more profitable, targeting the 375 mark right here for maximum profit here. Okay, but it doesn't have to land right at 375. They could be profitable if it drops all the way to 350 as well. Essentially, this trade will be profitable immediately as it starts dropping. You can see the profits start to increase. Now, the profits here are actually quite a lot. Imagine this coming up all the way up to, let's say it's at 420. That's $39 of profit, right? But we only spent $5 per trade. $39 of profit is divided by the initial investment of $5 times 100. This is 780% profit here, right? So this trader is using this strategy, butterfly strategy here, to hedge perhaps, or they are just shorting the market, okay, without any underlying stocks that they are hedging. So the cost of this trade, because they're $5 each, and we know they did 35,000 of these types of trades, the cost of the trade is actually not so much, only $175,000. Okay. Usually when we share our membership trades exclusively, private videos where we let our members know of unusual options activity, they range upwards of $1 million, because those wealthy investors and traders, we believe, have better research and accuracy in predicting stock price movement. So if you're interested in that, make sure to join our membership by clicking the join button. All right. So let's get right to the October 20s, the other one here. It's also 35,000 here. Okay. And because the 370 here is actually done twice here, it's actually 70,000. So it's the same ratio. It's actually the same strategy. You can see here, this was all done at the same time at the 25-second mark at 12:10. So what is this? 370 strike puts, 355, 385, right? 15 strike price differences between the two. Whereas the other one, right, when they were selling the 375, actually is the same, $15 wide butterfly, right? 375, 390. The difference between those two strike prices are $15. Okay, so this looks like October 20 here, 51 days away. It's the same type of strategy here, right? Over here, they target the 370s. We can see that here. And the other one was the 355s and 385s. Okay. So same situation here. Um, 355, you want to buy one of these, and you want to buy the 385. So that's what they did. Butterfly strategy. When you analyze the trade, you can see that each of these cost about $7. So still slightly more than the other October 6th. But again, it is not more than $1 million. This is only $245,000. So it's a hedge on the market, potentially. That is also going to be very profitable if the market starts to go down lower. So this is a short position here. Okay, you can see the Greeks, negative 0.52 per trade here. Okay, and very positive Vega. So if the market does drop, volatility will increase. So this is also taking advantage of the potential increase in volatility that could happen. We can see that the SPY right now is at about a 9%, so not so high. So potentially could increase, as we know that the VIX is currently not very high right now, more towards its low end. And so that is what we think about these two sets of unusual options activity that our subscriber pointed out to us and wanted our thoughts. And usually we don't review the market as often because a lot of times these are hedges, right? These could be just hedges because a large trader could use these to hedge their positions to the downside, but have very much bullish trades in their portfolio where if the market does go up, they will profit from their bullish trades, right? And they're only losing very minimal. You can see each of these trades just losing just a little bit of money. And so their bullish stocks will actually be a net positive for their portfolio. And so they put on hedges to ensure that if the market goes up or down, that they're going to be net profitable. And that's how you use options strategies to maximize your profits and reduce your risks. Because if you did not have hedges and the market goes down, then we could see a very large drawdown in your portfolio if you do not have any hedges using options. All right. So if you are interested in our strategies as well, we share that with our members. Click the join button to join to get access to our videos on our option strategies. And as mentioned before, we share unusual options activity on other stocks as well that have unusual options that we detect over $1 million, where we want to follow these traders and use option strategies to profit from this. All right. So that is our analysis of these SPYs, and potentially could be an idea that you can implement into your trade strategies as the market seems to be bouncing off of the first Fibonacci golden ratio level of 23.6%, as you can see here, right? We pulled a Fibonacci from the market's low, 52-week low, back in October 12, right? Around that time period. And then we pulled it all the way to the high of 459.44 on the SPY here that happened on July 27. And you can see here that we are bouncing off of this level here, right? At the 23.6, it's about $433, right? So that is currently what is happening to the market, right? And so that's our analysis. Please smash that like button, subscribe if you haven't, and hit the bell icon if you want to be notified of any unusual options activity. Thank you, and take care, everybody.